Good morning. Welcome to Ainsley News. It's Tuesday, the 12th of January, and we're talking Bitcoin. Of course, we're talking Bitcoin. What a month we've had. What a ride the crypto markets have been over the holiday season. When we closed our doors on the 23rd of December, Bitcoin was trading at around 31,000 Australian dollars, having already posted a 205% increase for the year at our end-of-year wrap. Ethereum was just over 800 Australian dollars after a 357% gain for the year. From there, BTC rose another 72% to 53,500 Australian dollars over last weekend, and ETH rose 118% to AUD 1750. Quite spectacular gains in a very short amount of time, but still not an all-time high for Ethereum. The entire crypto market cap surpassed $1 trillion for the first time ever. Such spectacular gains need some sort of rest, and that came yesterday Australia time. Bitcoin fell nearly 23% in AUD terms and ETH around 28%. Whilst these are healthy falls, they weren't of the magnitude a lot of the smart money was waiting for, around that 30% plus, but awfully close. As we write, the markets are rebounding fairly strongly, though it is too early to be sure we've seen the bottom of this long-awaited correction. Alex Saunders of Nugget News tweeted yesterday. Here's that tweet here. We've tapped the uptrend. Last uptrend high reached oversold RSI and outside BB on a 4-hour time, due for a large bounce, you would think. Nice chart there from Alex. From that post, it went on to nearly hit the line of $30,000 US, but bounced off at USD 31,000. As we write, in AUD terms, BTC has bounced off $41,000 and is already at $45,000. And ETH bounced off at 1,240 and already at 1,390. The difference with this rally as opposed to 2017 is likely the sheer scale of institutional money in the space. Each dip we have seen, hoping for a sizable correction to buy the dip, has very quickly been reversed, with analysts citing all that institutional money on the sidelines employing algorithmic bots to buy every dip. Whilst such seemingly nonchalant commentary on a nearly 30% correction may shock newcomers, such moves are normal in a crypto bull market and indeed welcomed by many as simply buying opportunities that are actually healthy and reinforce the technicals that this is a real market with real disciplined participants and not some tulip mania that was the commentary in 2017. Again, however, what is demonstrably different about this bull market compared to 2017 is the amount of institutional money buying up Bitcoin in particular. In 2017, Bitcoin was still a largely speculative investment for private individuals, and FOMO certainly kicked in to see a huge blow-off in 2018. It was the first bull market for the masses, and the correction scared all the new weak hands off to a point of broad capitulation that lasted until last year. But Bitcoin did not go away, and indeed, what last year also demonstrated to more and more of so-called sophisticated money was that governments and central banks around the world were on a terminally reckless trajectory of monetary debasement that had them looking for hard money alternatives. Bitcoin had proven its resilience, had proven its immutability, and became more apparent as a pristine asset that sat well outside those monetary actions. The likes of Raoul Pal, from a respected macro analyst perspective, and micro-strategist Michael Saylor, from a corporate balance sheet perspective, were pounding the table to buy Bitcoin, and more of their colleagues were listening. Enter PayPal's Bitcoin platform as well, and Bitcoin became very, very real and accepted. We also saw another Bitcoin halving, and the price action of Bitcoin, as supply was halved, followed beautifully that which preceded each halving. The economic science of stock to flow was proving to apply, and this saw a whole lot of credibility reinforced to that more sophisticated participants. You will recall from our early article on stock to flow that the model is predicting $100,000 for BTC in this cycle. The size of the money ready to be deployed so completely dwarfs the retail investors of 2017 that we really do have a new paradigm. The depths of dips may therefore also not be what is expected from the past. Whilst we may hope for 30% dips, yesterday we have been as close as we get. Raoul Pal is too calling for US $100,000 for BTC this cycle, and even said ETH might well go to $20,000 this cycle. Dips are relative. And that's news for today. Thanks for joining us, all those crypto fans out there. If you haven't yet checked out cryptocurrencies, jump over to ainsleywealth.com.au. You can purchase any of our offered cryptocurrencies there. We also offer buybacks as well, and you can exchange crypto for gold with Ainsley. Just give us a call. AinsleyBullion.com.au for all things physical, gold, silver, platinum, and goldsilverstandard.com.au is our own cryptocurrency built and backed by real gold and silver and stored at Reserve Vault. We'll catch you tomorrow for more news.